This is about reviving our community. So we wanted the commercial property sector to get a good idea as to what happens in the charity world, and we're trying to link the two groups together. Himesh is the Managing Director of Mantra Insurance. Himesh has over 14 years experience in structuring complex insurance programs for real estate and construction-led businesses. If I could ask you to tell us your angle, because I don't think a lot of these guys will know about fleas.
As Shailesh mentioned, I'm Himesh. I work for a business called Mantra. We're a group of businesses focusing on commercial finance, mortgages and insurance, and I head up the insurance business within the group. And I'm here today mainly to sort of give you a whistle-stop tour or highlight key considerations on insurance when it comes to vacant buildings. And I'll quickly run through the 4 points that I've listed on the screen. So the first point is not necessarily for property owners who benefit from a larger property program with a single insurer, but it's mainly focused on single assets. When it comes to placing big single vacant buildings into the insurance market, it can be quite difficult, predominantly because insurers aren't keen on them naturally, and it can mean that there's less of a pool of insurers to sort of tap into. It can reduce the number of options available. Another key consideration is policy conditions, warranties and guidelines. These are normally embedded into the policy. If a property becomes vacant, there may be requirements for regular inspections, typically every 14 days, and a written record to be maintained. There may be requirements for extra security to be applied, whether that be alarms, whether that be CCTV. There may be requirements for utilities to be isolated. All of these things cost time, cost money, and are required under the policy if a property is to become vacant. Restricted perils, and this is the flea point that Shailesh mentioned. So flea is effectively fire, lightning, earthquake and aircraft. This is the basic level of perils that you can buy in the insurance industry, and any vacant building will automatically have a restriction under the insurance policy to be restricted to those 4 perils. Typically, there's a time period that's allowed, so it's either 30, 60 or 90 days, depending on the quality of the policy that's being purchased, but the insurers will effectively restrict the perils to those 4. If the property is occupied, you typically benefit from accidental damage, flood, subsidence, malicious damage, impact, storm, and multiple other perils. If a property becomes vacant, it then defaults to these restricted perils, which effectively restricts the cover available, and you may still be paying the same amount of premium for that cover. Rating and premium is one of the biggest considerations, typically because that's the premium that you're going to pay to cover this building. You'll normally be paying the same amount of premium, but you'll be buying restricted cover. If you've got a tenant in occupation, and that could be a charity, and Shailesh and I have worked together on a number, and we've worked together with underwriters who understand the model, who understand that there's going to be someone in this building, there's going to be someone present who will frequently be there, who will realize if there's something wrong, if there's something going on at the property, if there's squatters, if there's a leak, if there's a fire, whatever it may be. We've been able to demonstrate to clients that discounts are available. It may not be the same as a property that's occupied on a formal lease, for example, where someone's there every single day, but there are discounts to sort of find a middle ground in that delta between a vacant property rate and an occupied rate. So those are some of the key things to sort of consider when it comes to insuring vacant buildings. And I'll be around sort of later on this evening if anyone wants to have a chat about insurance and the implications on insuring these buildings.
We've been given a warehouse in North Acton, which is right in the middle of Park Royal, and it's been sitting there empty for 1.5, 2 years, I believe.
Probably slightly longer.
Yeah, slightly longer than that, and it's become a pain in Himesh's backside in terms of trying to find insurance for it. It's really difficult. The landlord is now got 2 charities in there. One's called Gratitude, who phoned us, said, "Do you have space by any chance? Someone's offering us 40 pallets of household cleaning goods, which is not bleach based, so it can go into any warehouse. And if we don't take it, they're going to have to dispose of it, which would be a real waste." And this is in the same week as Himesh's landlord contacted us saying, "Happy to give you this space." That same building has now got 4 truckloads of office furniture being delivered this week from a company that's downsizing in London, very much like this sort of situation. So these things are kind of the ripple effects of, if you just spend a little bit of effort and time and benefit yourself in terms of just looking at your buildings and your portfolio, you'll see the ripple effect of what you're going to do across the charity sector. So I've got to say a massive thank you to Himesh for that.